Imagine this. You're ready to buy that new gadget you've been eyeing. It's sleek, it's innovative, and you can't wait to get your hands on it. You add it to your cart and proceed to check out. You pull out your credit card, but the transaction is declined. You try again, thinking it might be a mistake, but the same thing happens. Now you're starting to get frustrated. You call your bank, and after navigating through a maze of automated options, you finally get to speak to a representative. They inform you that there's an issue with your account, and it might take days to resolve. Frustrating, right? This is just one example of the limitations of traditional money. We often find ourselves at the mercy of banks and financial institutions, waiting for them to process our transactions. We rely on banks and governments to handle our finances, but this system can be slow, expensive, and even prone to errors. Imagine having to wait days for a simple transaction to clear, or dealing with unexpected fees. Think about the fees we pay for simple transactions, or the time it takes for international transfers. These fees can add up quickly, and the delays can be incredibly inconvenient, especially in our fast-paced world. Traditional financial systems can be a real headache. The inefficiencies and the bureaucracy can make managing your money feel like a full-time job. But what if there was a better way? What if we could bypass these traditional systems and have more control over our finances? What if we could send and receive money instantly, securely, and without relying on intermediaries? Imagine the freedom and convenience of being able to manage your money on your own terms. This is where cryptocurrency comes in. Cryptocurrencies offer a decentralized, efficient, and secure way to handle transactions, giving you more control and reducing the reliance on traditional financial institutions. Cryptocurrency is a revolutionary concept that is changing the way we think about money. It represents a significant shift from traditional financial systems, offering a new way to conduct transactions and store value. In simple terms, it is a digital or virtual form of currency. Unlike physical money, it exists only in digital form and can be used for a variety of transactions. It's like digital cash that you can use to buy things online and in some physical stores. Many businesses are now accepting cryptocurrency as a form of payment, making it more accessible than ever. But unlike traditional money, cryptocurrency is not controlled by any government or financial institution. This decentralization is one of its most appealing features, as it offers greater freedom and control to the user. It operates on a decentralized network, meaning it's powered by the people, for the people. This network is made up of computers all over the world, working together to process transactions and maintain the system. One of the key features of cryptocurrency is its use of cryptography. This advanced technology ensures that transactions are secure and cannot be tampered with. Cryptography is a complex system of codes and algorithms that ensures secure and tamper-proof transactions. It is the backbone of cryptocurrency, providing the security that users rely on. Think of it as an unbreakable digital lock that protects your money from theft and fraud. This security feature is one of the main reasons why people trust and use cryptocurrency. This makes cryptocurrency a highly secure and reliable form of payment. As more people and businesses adopt it, the potential for cryptocurrency to revolutionize the financial world continues to grow. To understand how cryptocurrency works, we need to delve into the fascinating world of blockchain technology. A blockchain is essentially a digital ledger that records all cryptocurrency transactions. Imagine a giant public book where every transaction is recorded and verified by a network of computers. This book is constantly growing as new blocks of transactions are added to the chain. The beauty of blockchain is that it is decentralized. This means that no single entity like a bank or government has control over it. Instead, the blockchain is maintained by a distributed network of computers around the world. This makes it incredibly secure because even if one computer fails, the network continues to operate seamlessly. You might be wondering, how is new cryptocurrency created? This is where the concept of mining comes in. Mining is the process by which new cryptocurrency units are released into circulation. It involves using powerful computers to solve complex mathematical problems. These problems are designed to be difficult and time-consuming to solve, requiring a significant amount of computing power. When a miner successfully solves a problem, they are rewarded with a predetermined amount of cryptocurrency. This process not only creates new cryptocurrency, but also helps to secure the network. The more miners there are, the more secure the blockchain becomes. Think of it as a global competition, where everyone is working together to maintain the integrity of the system. A world of crypto, Bitcoin, and beyond. In this section, we will explore the fascinating and ever-evolving world of cryptocurrencies, starting with the pioneer Bitcoin and moving beyond to other significant players in the crypto space. The world of cryptocurrency is vast and constantly evolving. From bustling stock exchanges to digital currency platforms, the financial landscape is being transformed by these digital assets. You've probably heard of Bitcoin, the first and most well-known cryptocurrency. It has become a household name and a symbol of the digital currency revolution. Created in 2009 by an unknown person or group of people using the name Satoshi Nakamoto, Bitcoin paved the way for a whole new asset class. Its journey from a niche digital currency to a mainstream financial instrument is nothing short of remarkable. But it's not the only player in the game. The success of Bitcoin has inspired the creation of thousands of other cryptocurrencies, each aiming to solve different problems or improve upon Bitcoin's design. Today there are thousands of different cryptocurrencies, each with its unique features and purpose. Some focus on privacy, others on speed, and some on enabling complex financial transactions. Ethereum, for example, is a popular cryptocurrency that allows developers to build decentralized applications on its blockchain. It has opened up new possibilities for creating smart contracts and decentralized finance (DeFi) platforms. Litecoin is another well-known cryptocurrency that aims to be a faster and more scalable version of Bitcoin. It was created by Charlie Lee in 2011 and has gained a reputation for its quick transaction times and low fees. The world of crypto is constantly expanding, with new cryptocurrencies and blockchain projects emerging all the time. This dynamic and innovative space continues to push the boundaries of what is possible in the financial world, promising a future where digital currencies play a central role in our everyday lives. The upside of crypto: advantages and opportunities. Cryptocurrency offers a wide range of advantages over traditional financial systems. One of the most significant benefits is its potential to make transactions faster, cheaper, and more accessible. With cryptocurrency, you can send money to anyone in the world instantly, without having to go through a bank or pay hefty fees. Another key advantage is increased security and transparency. Blockchain technology ensures that all transactions are secure and tamper-proof. The decentralized nature of cryptocurrency also makes it resistant to censorship and government interference. This is particularly important in countries with unstable economies or limited access to traditional financial services. The crypto conundrum: risks and challenges. While cryptocurrency offers tremendous potential, it's important to be aware of the risks and challenges involved. One of the most significant risks is price volatility. Cryptocurrency prices can fluctuate dramatically, sometimes within a matter of hours. This volatility can make it difficult to use cryptocurrency for everyday transactions and can result in significant losses for investors. Another challenge is the potential for scams and fraud. Because cryptocurrency is still a relatively new and unregulated market, there are opportunities for scammers to take advantage of unsuspecting investors. It's crucial to be cautious and do your research before investing in any cryptocurrency project. Crypto as an investment: high risk, high reward. Cryptocurrency has gained significant attention as an investment opportunity. The potential for high returns has attracted investors from all walks of life. However, it's essential to understand that investing in cryptocurrency is highly speculative and carries significant risks. Before investing in cryptocurrency, it's crucial to do your research, understand the technology, and assess your risk tolerance. It's also essential to diversify your portfolio and never invest more than you can afford to lose. Remember, the cryptocurrency market is still in its early stages and its future remains uncertain. The future of money: embracing the digital age. Cryptocurrency is more than just a digital currency. It's a technological revolution that is transforming the way we think about money and finance. While it's still early days, cryptocurrency has the potential to create a more inclusive, efficient, and secure financial system for everyone. As we continue to embrace the digital age, cryptocurrency is likely to play an increasingly important role in our lives. Whether you're a seasoned investor or simply curious about the future of money, it's an exciting time to explore the world of cryptocurrency.